Spectrum TV.
Hello, good morning. It's another wonderful business day. My name is Blyden Oken. It's Business 360, and we are giving you all the best stories and indices that has to do with economics and businesses. In today's edition of Business 360, we'll begin with the entertainment business. I know you're wondering what entertainment business is. You'll find out. $1 million wine heist took place in Mexico and Europe, but it's ending with Mexican beauty queen arrested in Europe. A Mexican beauty queen and her accomplice were arrested in Europe for allegedly stealing bottles of wine worth over $1.6 million. Her name, Priscilla Guevara, a former Miss Earth 2016 contestant in Mexico State, and her partner contestant Dumito spent months on the run after stealing the bottles from an upscale restaurant hotel in Spain. They were arrested on Tuesday while attempting to cross the Croatia-Montenegro border in Eastern Europe. Guevara allegedly checked into the Atra Hotel in the western Spanish city of Cáceres on October 27th, using a false Swiss identification and wearing a wig and sunglasses, according to investigators' reports. Later that night, 45 bottles disappeared from the restaurant's wine cellar, including a Chateau de Guam from 1806 valued at over $300,000. You might be wondering what a former Miss Earth would be doing in a wine heist. It marvels me either. What are you doing with a wine heist? Why are you taking all the wines away from this restaurant and hotel? Well, it's what it is. But talking about the big stories in Europe, Montever's boss has said that Russia is looting steel bound for Europe and UK. According to him, he stated that Russia is looting $600 million worth of steel from plants and ports in Ukraine. The boss of Ukraine's largest steel, the firm noted as Montever. The firm owns the Azovstal plant that became the last holdout of Ukrainian soldiers and civilians during the devastation of the city of Mariupol. Chief Executive Yuri Rezakov said steel was being transferred to Russia and sold on, some of which had been bound for customers in the UK. You can imagine a lot of customers are waiting for the steel and they can't find it because it's been diverted. But still looking at the situation at Russian gas, and it has to do with the Nord Stream 1 turbine. Moscow drags feet on its permit, talking about the Nord Stream 1 turbine. A missing turbine that Moscow says has caused the Nord Stream 1 pipeline to pump lace gas to Europe is stuck in transit in Germany because Russia has so far not given the go-ahead to transport it back, according to reports. Russia reopened the pipeline on Thursday after a 10-day scheduled maintenance shutdown, but it was still operating at reduced capacity. The turbine, which usually operates at the Russian Portovaya compressor station, had been undergoing maintenance in Canada but was flown back to Cologne in Germany on the July 17th by logistics firm Challenge Group. It is currently unclear when the turbine can be returned. The transport back to Germany happened after weeks of consultation between Berlin and the Canadian government over whether such a move would violate Western sanctions imposed on Russia in the wake of its invasion of Ukraine. Last month, Moscow cut the capacity of Nord Stream 1 by 60%, citing the delayed return to the turbine being serviced by German power equipment STVNg. It has been a back and forth situation, especially regarding the Nord Stream 1 pipeline and the current situation which has to do with the turbine. And there's still fears in Europe that Russia might one day cut the gas supplies to Europe. What a way to live, especially when you're depending on an ally turned enemy. Still talking about the big stories, we'll be looking at Japanese economy. Inflation stays above central bank target of 2% for third month. The Bank of Japan is keeping ultra-low interest rates in place, even as global peers tighten policy to cool rising prices. The annual inflation rate in Japan was at 2.4% in June 2022, little change from May's 7.5 high of 2.5%. The latest reading represented the 10th straight month of rises in consumer prices amid surging fuel and food prices following Russia's invasion of Ukraine, as well as a sharply weakening yen. Prices grew further for food at 3.7% against 4.1% in May. Fuel, lights, and water charges 14.4% against 14.4%. Clothes 1.1% against 0.9%. Housing 0.6% against 0.5%. Furniture 3.9% against 3.6%. Education at 0.7% against 0.8%. And talking about culture and recreation, 1.2% against previously high 1.7%, as well as miscellaneous, which happens to be in every business situation, 1.2% against 1.1%. At the same line, costs fell further for both transport at 0.7% against 0.8%, and medical care 0.7% against 0.8%. Core consumer prices were at 2.2% year-on-year in June, the most since January 2015, following a 2.1% rise in May, matching forecast while remaining above the Bank of Japan's 2% target for the third straight month. On a monthly basis, consumer prices were flat in June after an upward revised 0.3% gain in June. And so, talking about economic index, the European Central Bank has raised rates by 50 basis points for the first time in 11 years. The European Central Bank (ECB) raised its key three interest rates by 50 basis points during its July 2022 meeting, the first increase since 2011, ending 8 years of negative rates in an attempt to release the inflationary pressure. The main refinancing rate is now at 0.5%, the marginal lending facility at 0.75%, and the deposit facility at 0.00%. Remember, it was on a negative, and now they've risen interest rate to 0%. What? The central bank had initially committed to a 25 basis point rate hike in the June meeting, but inflationary risks continue on the upside, and policymakers considered appropriate to take a larger first step. Inflation in the euro area continues to march higher and break record rates, showing no signs of peaking and approaching double digits. The central bank also said that further normalization of interest rates will be appropriate in the coming meetings. And back to Nigeria, where there's a huge story. The House of Reps have moved to stop the privatization of 5 Niger Delta Power Company plants. The Reps on Thursday resolved to do this, stopping the privatization of the 5 power plants belonging to Niger Delta Power Holding Company in Nigeria, NDPHC. This motion was presented by Chairman of the House Committee on Power, Magaji Aliyu, at the plenary in Abuja. Aliyu noted that the National Council on Privatization and Board of Directors of NDPHC, in collaboration with the Bureau of Public Enterprises (PBE), had resolved to solve the power plants. He listed the 5 plants to include Calabar in Cross River State, Ihobo in Edo State, Olorosogo, Omotosho, and Geregu in Kogi. He stressed that the plants were constructed under the National Integrated Power Project (NIPP), with gross installed capacities at 150 conditions: 506 megawatt, 507 megawatt, 634 megawatt, 513 megawatt, and 755 megawatt respectively. According to the lawmaker, the federal government holds 47% shares in NDPHC, while states and local governments have 53%. Is the story of privatization, people wonder, is it a gain to privatize or not to? Well, the answers will vary depending on what different people and their different outlook are. Many would say many strokes for different folks. But at this point, we'll go on a break. When we return, Business 360 continues, talking about further Nigerian stories and the biggest news in the stock markets. Thank you for staying tuned and welcome. It's Business 360. My name is Blyden Ukem. I'm happy you had a good glance of the beautiful hills of Ibiakoran. This is Business 360 coming all the way from the beautiful hills of Ibiakoran. But talking the big stories in Nigeria, there has been an increase in fuel subsidy spending for 2023 by 2.7 trillion naira. The federal government will spend 2.7 trillion naira more on fuel subsidy payments in 2023, according to the Minister of Finance, Budgets and National Planning, Zainab Ahmed, during the presentation of the 2023 to 2035 medium-term expenditure framework and fiscal strategy paper in Abuja. She said the government estimated subsidy payment would gulp 6.7 trillion naira. Huge. The amount was spec'd on the business as usual scenario, higher than the 3.36 trillion naira projected for the reform scenario. However, the government had put the estimated subsidy spending for this year at 4 trillion naira. The rise in price of crude oil and the ripple effects of the Russian and Ukraine war are believed to have driven the increase in Nigeria's fuel subsidy payments, which the government had planned to remove in January, but suspended the decision till June 2023. And in the Nigerian quarters, there are big questions. What is stopping government from eliminating the concept of fuel subsidy? Well, the minister explained it already, and it's not coming anytime soon, most likely in 2023. To the Nigerian stock market report, investors lost 34.7 billion naira as Guarantee Trust Holding, United Bank of Africa, lay trading volumes. Investors in the Nigerian capital market lost the said amount, which is 34.7 billion naira, following the drop in equity capitalization of the tune 28.10 trillion naira on Thursday. The figure was less than the 28.14 trillion posted by the capital market on Wednesday. Similarly, the all-share index was down by 64.52 basis points to settle at 52,122 compared to 52,186.52 recorded the previous day. Investors traded 151.94 million shares valued at 2.15 billion naira in 3,447 deals. This was lower than the 238.27 million shares worth 3.33 billion naira traded by investors in 3,814 deals on Wednesday. Well, multiverse led the gainers with 17 kobo to rise from 1 naira 78 kobo to 1 naira 95 kobo per share. International Brewery topped the losers chart after shedding 50 kobo to drop from 5 naira 45 kobo to 4 naira 95 kobo per share. Guarantee Trust Holdings led the day's trading volume with 33.84 million shares, which was valued at 707.71 million naira. Let's look at what an all-share index is up to. You can see the change on your screen, and the all-share index is a series of numbers which shows the changing average value of the share prices of all companies on a stock exchange, and which is used as a measure of how well a market is performing. A quick look at the share index, how market had progressed. Looking at it from September 2021 and moving to January, you see that the index, all-share index, was at 40,000 naira range, and it moved up from last year, November, in January, and this year it's up to 50,000 points, which is an indication of a positivity in the market. As the all-share index increases, surely market cap tends to increase, meaning there are more investors in the Nigerian stock market this year compared to last year. And here are the bottom losers and the top losers. Honeyflow topped the list of losers with a change of 2.25 basis points, a drop of 7.79%, while the top gainers has top movers as Guarantee Trust Holding leading the top gainers. But quickly, let's have a look at the foreign exchange market. A quick look at the foreign exchange market shows that the FX market is doing quite well. The Euro USD is at a current price of 1.01594. A slight drop in the early hours of this morning of 0.00699 points. A slight drop it is at 0.67%. As at yesterday, the euro appreciated a bit, but it's fallen slightly in the Asian markets of this morning. Looking at the general markets, pound is also is dropping at 0.0422 level, a point and percentage drop of 0.35% in the early hours of the morning. The gainers in this early morning will be the US dollar against the Japanese yen at current price $137.328 per yen, which is worth a change of 0.22 points, is 0.16%. The biggest be the US dollar against the ruble, which you could see below here at 57.9, talking about the ruble to the dollar, a 3.9% gain and a 3.9 points and a 7.22% gain in today's market. You might be wondering what's happening in that market, but a quick look at Naira, what Naira is doing in today's market, because we can't talk about global currencies without including Naira in it. Naira seems to be a bit up and a bit downward. Talking about Naira against the Japanese yen, current price 0.33228 and a fall of 0.00139 points at 0.42%. And looking at other markets regarding the Naira, Naira against ruble, Naira is gaining against some of these markets against Australian dollar. There's a fall there in that market, but Naira against quite below on your on the below on the charts. You could see Naira against the US dollar. It's been a little here. There's not really been much movement. This is the market outlook, and it's wonderful what the market is doing. A quick sight to what possibilities would be moving into next week. This is all on Business 360. My name is Blyden Okem. Don't go anywhere. News at 12 is up next.